Hello, everyone. Welcome to another episode of Traders Room. So today we're gonna explore the relationship, let's say, between cryptocurrency market and forex so far in 2025. So these two, let's say, markets are influencing each other or not. What do traders need to know about this market ahead of the rest of the year? So that's today's episode. I'm Andrea, and Mihalis. I'm going to discuss with Mihalis today this quite tricky, let's say, topic. What do you think about cryptocurrency markets so far, Mihalis?
So, welcome everybody. Yes, I mean, this year, 2025, it's been I think, a different year compared to what everybody was expecting. There was a lot of hype after the US elections, after we had
True.
a very verbal, I think, pro cryptocurrency. I think he definitely incorporated it as part of his campaign. So, there was a lot of hype in 2024 towards the end of it, especially in November and December. But we've had a
Elections, right? Mr. Trump.
exactly. But I think investors have taken, in a sense, a slight U-turn in the short term anyway. So we're seeing something very different. So yes, me and Andrea today will discuss the reasons why we haven't seen that momentum that we originally saw in 2024 continue, because there is valid reasons for it. It's not just a dip without any fundamental or domino effects behind it. So we're going to look at that, and also we're going to look at digital central bank digital currencies. Not something which is available within the market at the moment, but something which is gaining momentum, gaining speed. A lot of central banks are looking at that across the globe.
Yeah, we
Um,
have seen several countries actually adopting or trying to create, basically, simply said, their own digital currency. So that would be very, very interesting to keep an eye on, because it might be our new reality, let's say, at some point, right?
exactly. So yes, we even though it's not something in the market at the
Yeah.
moment, all institutions, all investors, including traders, they've got it in the back of their mind. It's in the spotlight. They need to keep an eye on it because it's something which potentially can have a ripple effect throughout traditional currencies, the forex
Mhm.
market, also cryptocurrencies as well. So we need to keep an eye on it. We need to evaluate it. There's a lot of spotlights on it at the moment. So we're definitely going to mention it and speak about it because I think it's new in the market. Like 10 years ago, cryptocurrencies was very new. A lot of people didn't know about it. So we will explain partially what we know so far. It's what it is and how it can affect the market. But like Andrea said, I think before we go and start looking at central bank digital currencies, let's look at the cryptocurrencies so far in 2025. I mean, we've had a dip, haven't we, Andrea, so far?
Actually, yeah, we had a significant drop this year. I could start sharing my screen. Let me just allow me a minute. Uh, having the Let's have a look in the. Oh, sorry, my bad. That was Bitcoin. That was gold initially. Sorry, my bad. So this is Bitcoin. So we had a significant dip, as you said, a significant drop, and it was about approximately about 27% from the peaks that we have seen. That should be around the end of 2024, and another peak at the very, very beginning of 2025. If you can see my cursor. So yeah, actually we have seen basically over $800 billion been wiped out from the crypto market so far this year. So it be a significant decline, as you can see. So we are still in a down leg. And as Mihalis mentioned earlier, we have many reasons that actually are hidden behind this crypto drop. So a lot of uncertainties, a lot of risk on and risk off sentiment has affected significantly the conditions that we are seeing in the market in general, but more precisely in crypto. So um, let's break it down a bit, right?
I think
Uh,
let's go through each of them. I think step by step,
yeah,
because we've, like Andrea said, it's dropped by 27%. If we're looking at the high and the low that we recently saw, it dropped by 27%. It's not necessarily a negative thing. I mean, that gives everybody an opportunity to enter at a discounted purchase price. But the main thing is, what's driving the price lower? Do we think that will continue, or is it now an opportunity to speculate and take advantage of that lower entry level? Like Andrea said, one of the reasons is within the market, the risk appetite definitely has fallen, hasn't it, Andrea?
for sure. We have a lot of uncertainties. I mean, from every single front, geopolitics, monetary policy, regulatory disappointment, in which we're going to explain in a bit. We have a lot of uncertainties, even globally, but also in the US economy as such, which basically is the biggest economy in the world, right? That's why it has an immediate impact in the market, and more precisely in the cryptocurrency market, because we have a president that is supposed to be a crypto friend, let's say, president. So yeah, that the main one of the reasons, if not the number one, in my humble opinion, is the risk appetite, the low risk appetite, that actually is pushing the traders to change and to shift their cash into safe haven assets, or back into the safety of dollar. Occasionally, depends of the current affairs that we're seeing in the market.
Exactly. I mean, certain assets, especially for our beginner traders, it's important for them to know certain assets that they're massively driven on the psychology of investors and economists. The risk appetite of the market, especially with certain assets. For example, Bitcoin, which is massively associated with risk and volatility. So, of course, when the market is experiencing a lower risk appetite, and there's reasons for it that we're going to look at. I mean, there's the Trump's trade policy that's going to gain momentum, especially on the 2nd of April, where we're going to have potentially like for like tariffs on global markets. The risk of a recession. We had the Federal Reserve speaking yesterday. They cut GDP projections as well. And like Andrea said, we were expecting a very pro crypto friendly president that gained a lot of momentum in 2024. But in January, February, he was very slow in terms of executive orders, new regulations, or should we say softening regulations, should we say.
It's
And that, as a result, created that domino effect, and we definitely saw a decline in the
it's
market.
in general the lack of clarity that we have, right? I mean, the lack of clarity from his side, from his administration, regarding everything that he promised before the elections. The lack of clarity from the Fed as well. Even though we had just yesterday the Fed, as you mentioned, but we are not quite sure regarding the timing yet of the
Of
actual
interest.
of interest rate. I don't know whether you have seen the Fed watch. When is expected? I mean, when do the markets um, expect, let's say, the next rate cut from the Fed?
I
Because
mean, if we're looking at the Fed Watch tool, which is basically a tool which is provided by the Chicago Exchange, is the third largest exchange in America. They provide an indication of what the market believes, when, should we say, the market believes the next interest rate cut will be. Now, if we're looking at a week ago, there was a 65% chance that in May they will not cut interest rates, that they will
hmm,
pause. That actually is higher at the moment. At the moment, we're looking at an 84% chance that they will pause in May. So obviously, there was comments from the chairman of the Federal Reserve, Mr. Jerome Powell, which triggered a slightly more hawkish expectation from the Federal Reserve. But of course, we also need to take into consideration, rather than just market expectations, what he actually said. Because one of the things he did say, which is written down and confirmed, is that the Federal Reserve expects that GDP, basically economic growth in America, is going to be weaker. So the projections for GDP were cut in yesterday's meeting and confirmed in the press conference by Mr. Jerome Powers. Of course, that has a domino effect not only on inflation but also on expectations of interest rates. So even though the Fed Watch Tool at the moment is given a more hawkish view in the market, maybe potentially the fact that the Federal Reserve has cut expectations of economic growth. Also, in the past 24 hours, Bitcoin has increased in value, even
Mhm.
though it's declined this year so far. Over the past 24 hours, it's increased in value. Maybe potentially that's also because of Trump's recent comments, because he has also recently commented, Andrea, hasn't he, on
Yeah,
the Fed?
as usual, he's criticizing Mr. Powell once again. That reminds me back to the situation between them, the relationship back in the very first Trump era. So yeah, he's criticizing again. Actually, there was a statement from him in the Truth Social stating that the Fed will be much better off cutting rates. Because of U.S. tariffs, as he said, because of the U.S. tariffs and the potential transition into the U.S. economy, and he
Exactly.
literally said, "Come on, do the right thing." 2nd of April is a liberation day in America. This is what he stated after the Fed statement. So he's like warning that you know what, wake up, tariffs will affect even more the growth, the growth of the U.S. economy. So he do something. This is
He wants that cushion, basically.
yeah. So
Because when you're going to get the tariffs on the 2nd of April, I mean, they're like for like tariffs, ladies and gentlemen, which basically means if, for example, Germany is charging the US 50% on certain goods, they will ensure that they also charge Germany back the same uh, the same percentage. So that's something which is coming in on the 2nd of April. So 2nd of April is a detrimental date. It's a
mhm,
very important date for the financial trading market. So of course, that is known to have a negative effect on the economy. According to Trump, it could be just a dip, something in the short term, a transition, as he calls it. But if he's able to get an interest, some kind of indications of at least interest rate cuts at the next Federal Reserve decision, which is in May, then that can create a cushion. So if we were going to see some negative effect on the market, that positive piece of information can cushion that slightly higher.
through that and
So that's what he's trying to achieve.
to achieve, yeah. So that this is something that, guys, this is something that already affects the global sentiment. So as we closer to the 2nd of April, we could see still the global sentiment being affected. I mean, in an even higher and higher and higher level. So yeah, the second factor, let's say, other than the second most important factor that affects the cryptos drop and in general the market is what Michalis explained just now, the trade policy, the relationship, the effect of trade policy into the U.S. economy, the how it affects the central bank's actions. So we are all these basically are adding to a very uncertain and uncertain environment. That's why the recession fears are keep rising, and we can see that effect that investors are basically um, due to this recession fear, the uncertainty, the economic slowdown, we are seeing that this affects and weighs on risk assets. Um, so yeah, this is just adding to the drop of crypto. Um, so yeah, the this is just a bit of a sum up of all the reasons behind the crypto drop. Um, so yeah, shall we? What do you think? Shall we move to a more technical perspective? So shall we check the technical side of the
Of course.
of Bitcoin or?
I mean, I'll share my screen because I want everybody to know we've just released also a new cryptocurrency CFD trading account. It allows individuals to trade cryptocurrency with a leverage of 1 to 1,000. Also allows individuals to trade CFDs on cryptocurrencies 7 days a week, 24 hours a day. So that's something which is very important for individuals who are trading and speculating in the CFD market. I mean, here we've got Bitcoin against the US dollar. The good thing about the cryptocurrency CFD trading account is you've not only got Bitcoin against the US dollar, but you've got cryptocurrencies against multiple currencies as well. It's not just major currencies, even minor currencies as well. But I think the one which everybody's interested in is Bitcoin against the US dollar, right, Zambia?
Yeah, even though I'm losing you a bit. But yeah, it's still the number one. It's still the biggest in market capital, right? Is the one that affects the remaining crypto market as well. So I was checking your chart actually, and I was trying to check how it reacted yesterday on the announcement. But something that got my eye is this big decline that we have seen in the 7th of March. That was when we had the executive order, the Trump executive
Yes.
order on the national digital assets. So one of the reasons that we explained earlier, guys, his the fact that he
There we
promised a lot
go.
of crypto-friendly policies before the elections, and the only thing that he delivered so far is that executive order for national digital assets. But uh, that's something that didn't actually boost Bitcoin, but vice versa. It actually drifted lower because there was a lack of clarity on whether they're gonna this stockpile will be Bitcoin only, or it was very generic. Basically, it didn't clarify. Neither the executive order had actually written had specified whether it would be Bitcoin or any other, which actually digital assets will be on that stockpile. So the lack of clarity again, even on on the policies, on the Trump's policies that they have been signed so far. So you can see that that's clear. Yeah, so you zoomed in a bit, and I can see that
So we've got a
that
decline of over 6%,
yeah,
over
over
6%, and
60.
also it consecutively declined in the days after. So I've got day separators here. We can see we've got that strong volatility downwards. Six here, for example, just in the space of 2 hours, it dropped by more than 6%. And then consecutively in the days after, it also continued to decline. And we can see here it dropped, ladies and gentlemen, all
Below
the way down
50,
to
right?
just under, well, should we say just over 76,500 US dollars. So it dropped significantly low compared to, when we were looking at highs of over $106,000. So since then, though, we definitely can see if people have taken advantage of that lower price, they've entered that lower price, and especially yesterday, we saw a very strong price movement yesterday for Bitcoin. I think it's massively related as well with what the Federal Reserve uh, announced. Also, we saw all risk-based assets, including the stock market, reacted in a very similar way.
Mm-hmm.
So since then, we can see we're trading actually at the moment. If we're looking at today's high, because today's high rose all the way up to 87, almost 87,400. That is the highest price that we have actually seen, ladies and gentlemen, since the 7th of November, the 7th of March, sorry.
Yeah, the
So
executive order, since prior executive order, basically.
exactly. So we've more or less had we saw that downward price movement. It was a strong downward price movement, but we've corrected since then, should
Mm-hmm.
we say? And if we're looking at average price movements, I mean here on my screen, I've got Bollinger Bands. We're trading in the upper band of the Bollinger Bands. Bollinger Bands are starting to widen. That's indicating as well, indicating the higher volatility. We're at the moment trading above the average price movement. So we're starting there to also get indications that potentially maybe buyers are starting to regain control of the market. The question is, though, is if that's going to be maintained. Are we going to see that being maintained? Because it's at at a price now where we're at that neutral level that we needed to regain further momentum upwards. Otherwise, we just may fall into a symmetrical triangle pattern, in which case it's not necessarily indicating longer term stronger bullish price movements.
If you allow me, Hali, yeah, you are right. It's at the really it's quite interesting, something that to keep an eye on, because especially if it reach closer to 87, 80, 88 territory, say 88 k, sorry, 88,000, it could raise some concerns regarding a reversal. However, as I've monitoring my screen, I can see that yet, at least in the medium and long term, we are still back to, we're actually in November 2024 territory still. So it's something that definitely our traders should keep an eye on, just just to spot any sign of a possible reversal, even though for the time being it's still there is a bit of a channel, isn't it? I mean, from January's highs up to now, it's like a descending triangle. Sorry, channel, downwards channel. um so
We can definitely see there's a regression channel here for sure
yeah,
at the
so is it,
moment.
yeah, so is it testing it, it's trying to touch it.
It's testing it at the moment, so that's why it's definitely key that we regain more momentum to move out of this regression channel. Because at the moment, if we're going to remain there, then we're still at lower lows, we're still at lower highs, we're still within the regression channel. So it could just be we've had that spike upwards, we've got further than we've outreached basically, we've got to an overbought price, and it just
Mhm.
continues to honor that regression channel. Whereas if it gains further momentum, moves out of it, maybe even moving above at least the 75 period average price movement, so 75-day basically average price movement, then we're getting stronger buy signals materialize. But it's an if, it's if we're going to
It's
see that
because
momentum.
as I can see, that territory is a very, very strong resistance level. I mean, the 90,500, somewhere there. I mean, it was the bottom, that the support that we have seen since November, December, January. Yeah, that horizontal line, exactly. And it coincides, as you said, with your moving average. So
Yeah,
that would be a very, very strong resistance level. So yeah, absolutely, you're absolutely right. That would be a very, very important breakout if and only if actually happens, because it could change the outlook into a positive one.
exactly.
Uh,
If we're going to remain below it, we still got that risk of the support being flipped onto the resistance.
yeah.
Whereas if we break above it, then we start to see stronger buy signals materialize. But it's if we can maintain that momentum,
Mhm.
if we can maintain that momentum.
On the flip side, though, if you allow me, I have spotted an M formation, which I shared earlier. So my
Would you like to share
support,
your screen?
yeah, yeah, just a second. Okay, here it is. Um, which that gives me the next support level if we see, of course, a continuation of the down channel. That gives me the next support level down to 72,800 territory. I just measured. I relied a bit on the technicals of M formation pattern, and I measure the length of the M formation. That's why I end up with this level as my very next support level if we see the down channel resuming a bit. So yeah, that's if I zoom out a bit. Actually, this is also coincides with the resistance area of 2024. Yeah. So very, very interesting to
That, and
keep
if it
an
goes
eye
to
on.
that support level, we're looking at a drop, ladies and gentlemen, of 34% approximately. 34%. So that's definitely a significant decline. I mean, that's a decline that we haven't seen in a very long time for Bitcoin. So that's a key support level because if it
Mhm.
declines to that level, we're looking at a discounted price of 34%. Keep in mind, the lower the price goes, the more prompted buyers are to re-enter the market at that lower price to take advantage of the discounted price. So that's definitely a key level if we're going to decline down to that level.
Definitely some of the, if the fundamentals that we explained earlier, I mean, the risk appetite, trade policy, recession fear, political disappointment, everything that we covered earlier, if they continue, I mean, the same factors continue affecting the market for the rest of the second quarter or even the third quarter of the year, they will continue to be a negative factors for crypto markets. So we, from a theoretical perspective, let's say, considering all these disappointment and uncertainty that we're facing, we might see further decline for crypto and for Bitcoin, more precisely in general, the crypto market. But I'm wondering whether the correlation the the between the fundamentals and the cryptocurrency market has changed so far this year. I mean, whether there is an even stronger correlation between um, the fundamentals, the economic data, the geopolitics, and everything. I mean, whether we have an even stronger uh, correlation between uh, the news and the crypto world, because so far that wasn't something that we were taking for granted, right? So I mean,
We're definitely seeing it starting to move and react very similar to, for example, the stock market, which is massively driven and reliant on news and data being released within the economy, within the political sphere and global sphere as well. So we're seeing very similar price movements that we're seeing in the stock market. We're also seeing them in cryptocurrencies. So definitely, I think they're starting to tie in with economic data massively because the cryptocurrency market is correlated with the risk appetite of the market. So, of course, if we are going to see momentum in terms of projections of a recession, interest rates not being cut, especially after April 2nd, when trade policies are going to significantly
take
change,
place, yeah.
then we're at the time now where so far based on the price action of the asset we can see it is correlated and we can incorporate fundamentals more into cryptocurrencies.
So you mentioned a correlation with stocks more precisely. So you think that actually they could even influence stocks? I mean, they could any uh, I mean news out of that refers to cryptos, they could actually influence the rest of the market or stock market or even forex market. Do you think that we might see
The
something like
for, I think it will be more having a domino effect on the forex market rather than the stock market. I think at the moment they're correlated in the sense that what is triggering a risk-off appetite in the stock market is also doing the same for the cryptocurrency market. But for sure, and now that we're going to start looking at digital central bank
that?
digital currencies, there is within the forex markets, within CBDCs, that can influence and create volatility on cryptocurrencies for sure. I mean, should we cover uh, central bank
Yeah.
digital currencies? I think that's something which can potentially in the future, if not at the moment, but in the future, can influence um, cryptocurrencies more directly.
You're right, because markets are evolving, right?
Mhm.
So there might be uh, we might face basically in the near future an overlap between crypto trends, CBDCs, and the traditional forex trading. So that's something that we definitely need to keep an eye on. It's something that in general the financial world should keep monitoring because it could change the forex trading in general. And I'm not referring only to crypto crosses, but in general the market as we know is so far. Um, so yeah, that's something to keep an eye on. We have seen, as we mentioned in the very beginning of this podcast, that CBDs, sorry, stands for Central Bank Digital Currencies. So basically, the in simple terms, let's say they are the digital versions of a country's national currency issued by the central bank, regulated by the central bank, and we actually see a lot of countries issuing digital their own digital currencies like Chinese yuan. European Union also, I think, is quite advancing in its digital euro. US for sure. That's something that could affect the global uh, trends, the global economy. Uh, so definitely something to keep an eye on, and something that will affect the financial world. But why do you think that governments are really pushing for their digital currencies? We are seeing more than 134 countries uh, uh, issuing their own currency. So why they're in a rush? Why?
I think central banks have seen it gain speed. They can see it's gaining momentum. Investors are seeing growing confidence in the cryptocurrency market because the forex market was a market without competition, to be honest with you, for many, many, not necessarily decades, but more than that, centuries, where it was a market without competition. It was, of course, there was competition
True.
between currencies, but other than that, there wasn't much competition there. Whereas in the past 15 years, maybe slightly more than 15 years, we've had cryptocurrencies enter. A lot of people were skeptical on cryptocurrencies. Economists and central banks definitely were skeptical on cryptocurrencies, but they've gained momentum, they've gained speed, confidence has risen, economists are really starting to take a U-turn, so are bankers really starting to take a U-turn. So central banks are trying to gain, should we say, to build a middle ground, because you've got the centralized traditional options, traditional currencies, and then you've got the untraditional, which is decentralized digital currencies. Um, and what the central bank is trying to do is to create an intermediate market where it's not necessarily decentralized, but at the same time, it is a digital currency. Because, of course, without that, there is benefits to digital currencies, right? I mean, what kind of benefits, Andrea, are central banks trying to create and prompt from central bank digital currencies?
As far as I can see it, the very first thing is the cost. They're trying to find a solution that will mean less expenses. So potentially, we could say the interesting thing, actually, the advantage of having a digital currency is the fact that they could make payments faster and cheaper, more precisely
Hmm.
cross-border payments. So I think from if I see it from a central bank's perspective, I believe their goal, the number one, let's say, goal, is to achieve that faster and cheaper payments. But it's also, I mean, it also has to do with other than the payments, the cheaper transactions, also has to do with technology, right? I mean, we have AI now. We are seeing that technology is moving forward and forward. So uh, the also technology needs to be the central bank needs to move along with the technology future, with the technology steps that they are huge right now. So they need to follow. So
They need
um,
to follow, be left behind.
they have, yeah, definitely, and that could be a game changer for sure. I mean, um, uh, a game changer from cost perspective, from liquidity perspective.
Hmm.
Um, so and it would be more efficient, right? For central banks. I mean, um, but, we can they can explore several other, let's say, uses of central banks, of digital assets, other than the fact that they could be of low cost. So, but I'm wondering actually of this transition from the traditional systems, whether it's gonna affect our markets, because markets are rely on volatility, on liquidity. So it might be a double sword, let's say.
For sure, I think a lot of economists and analysts believe it will create volatility. Um, I mean, we cannot say for certain because it's something new within the market. It's not an event which has previously taken form. It's something which will take form for the very first time. So we don't necessarily know how it will create a ripple effect throughout the rest of the economy, other than, yes, of course, it will create volatility. Um, so, I mean, today we've looked and we've confirmed about central bank digital currencies. We've looked at the currency market in general. We know that it's declined. We know it's slightly rebounded the past 24 hours. Uh, we've noted as well that we're at a detrimental price now, that if it doesn't maintain momentum, it could continue to decline, because we've looked at multiple reasons, haven't we, Andrea,
Yeah,
on why it's declined. Central bank digital currencies is something which is coming, it's in the making, it's something that's in the spotlight, something we need to keep an eye on, but not necessarily yet something we know how it's going to affect the market.
exactly. There is no impact so far. It's just food for thought, let's say, something to keep an
Exactly.
eye on for the rest of 2025, even into 2026. We cannot really tell when it will start, let's say, to start affecting, having an immediate impact into our traditional financial system and on our market. But the only thing that is for sure is that it is going to have it could actually challenge dollar as well. It could challenge the traditional financial world, but whether they're going to challenge it with a good way or in a bad way, we are waiting and see, right? But definitely, it could be a key
Exactly.
challenge, and it could affect liquidity, volatility, uh, uh, and it could also, sorry, it could also mean that the central banks will have back in control the digital assets. So slowly,
And that's
slowly,
fear of
they
the
gain in the
market.
control. They gain in the control. Yeah.
So, guys,
Oh,
hopefully you
yeah.
enjoyed today's podcast. We've covered quite a lot. I'd like to thank Andrea as well.
Thank you very, very much as well.
Hopefully you enjoyed it and found it educational. In the meantime, though, we'll be waiting for you on our next episode.
Mhm.
Goodbye from us.
It's a pleasure. Thank you very much, everyone, for joining. And yeah, we'll see you uh, later on in our next episode. And we're going to come back with more updates soon, hopefully.
Take
Stay
care,
tuned.
guys. Goodbye.
Thank you. Bye bye.